All right, good evening, guys. Thanks for your patience. Ken at Tortoise Capital, nightly strategy podcast for December 27th, 2022. We'll start with the sniper trade of the day. So this is Tesla. 3-minute chart, standard. Here was last week's close. Here was the gap down and open. This is the OR3 in blue. In the second bar, it took out the top of the OR3, so we're long with a standard risk box. And we'd be looking to target a closing of the gap, and then it would get interesting if it gets to that level. It immediately reverses. I take a half an hour loss. When it moves a full manageable risk box away from the open, so when it moves that far from the open, 1 MMRB, which in Tesla is about $1.20. Sort of like a delayed stop and reverse. I didn't wait for it to take out the OR3. This was Tesla, and if it starts failing, then I want to be short. So we're minus 0.5 on the first trade, because it could just as easily have closed the gap. But we take the same risk box, and now we're short. By this point, about 3 or 4 bars in, you should have your stop to no lose plus dinner for 2, so that you've locked in at least that much. No lose plus dinner for 2. I wouldn't be offended if you were, if you took like a 2-bar high. That's also legit. It's how much room you want to give it. I like giving it more room rather than less. And that after that first wedge is in, I'd like to see it get, some traction first. I don't want to cut it off too soon. But if you had gotten this stop, and if that took you out, then this move here should get you back in on the short side, because now it's rolling over, and now you have a 1, 2, 3, right? So that's the entry that should get you re-short. By accepting a little, giving it a little more room to play here, this won't get you out, because you've taken all your anxiety out. And in the long run, that has turned out to be a pretty good thing. Now, what's key on this one is you're watching the RL10. So this is still noise. All of this is noise. That's the price action that you want to track. The fact that this is rolling over is a very good thing. So I take the exit here, because that's what the rule is. When the RL10 hits the PSAR, that's the exit. Okay. So that nets 1 unit of risk 2 units of reward. So that's about plus 2 and minus 0.5. So we're at about net plus 1.5 right now. Check or hold. Now we get a PSAR flip again. When the R10 rejects and comes out of the dragon and is coming down through the PSAR, standard short, standard risk box, and again by this point, why is it? That should have been. Sorry. So by this point, you should have your risk out. I'd like to be about there. No lose plus dinner for 2. And we're looking good. Standard exit for about 1. So 1 unit of risk, about 1 unit of reward. I would not be offended if you saw this and this rollover and you took a 1, 2, 3 to lock in a slightly better exit. There's nothing wrong with that. So now we have a higher, lower highs, excuse me. The R10 rolling over, crossing through the dragon. What would we call that entry? Kata 2. It is your friend. Standard risk box. Now this was kind of a slow day. We had about 3R already in this thing. At this point, it's after lunch. Tesla is by far the worst thing in the market. And on this little breakdown, I just put a second position on. If you hadn't put it on there, then you could put it on here after that R10 wiggle. Or even in here. I just looked at this one as the test of that support level. And then we're getting into just coming into the close. And that was the last trade on Tesla. So here's 1 unit of risk. So about this one earns plus 2. This one earns about plus 1. So we end up anywhere between 5 or 6 on the day for Tesla. On a day which was not really all that volatile or liquid. So that was the day in Tesla. This is our 30-minute look. on SPY, 30-minute charts. This blue is the 5-day, 10-day. There's your 10-day high, 10-day low, 5-day high, 5-day low. This yellow box, excuse me, is today's price action. So a relatively quiet sideways day compared to the day before. Right in the middle of the 5-day range, which is at the bottom of the 10-day range. But it didn't fail further, so I take this as a critical state. Still ready to go in either direction. Not much conviction, not much volume today. I take that as a positive sign. That failure to fail further in a bear market. This is our daily chart. Here's our 1-day, 5-day, 10-day, 30-day look backs. That's the 5-day, 10-day, and 30-day low. This is the beginning of the R10 reversal. So if that holds, then this is going to be a support level at 377. The 30-day and 10-day low, strong support at 375. High of the day was the southern skin of the dragon. There's the spine, the upper level, and that's going to be about where the PSAR is tomorrow, around 390. So there's tactical room for this thing to go and still be within this downward path. So it has to get above 390 to be interesting on the long side. There's your top of the dragon, top of the R10 at 406 for the upside. Any breakdown below the 30-day low is lookout below. As you can see from the 150-day. So there's our, combination of 10-day, 5-day, 10-day, 30-day lows. And then if that breaks, your first support level really is, this is the middle of that congestion zone. So I'd just say that's where it would start to slow down, you would expect. And then the solid support at 356. If that fails, holy smokes, you want to be like triple short by that time. So there's a little bit, there's just a little bit of wiggle room in here. It starts getting serious fail here, double serious fail here, and then triple bad if it gets below there. To the upside, it's all tactical until it gets above. It's all tactical till it breaks above the PSAR. That's when it really first gets to the upside. And then if it gets above peak of the RL10, double good. And then above 430, triple good. So here's our little tactical trading space here. 390 to 375. That's about a 5% trading zone. And that's where we're making our money on the intraday trades. The intraday trades are making bank on volatile moves inside that tactical space. We don't start getting directional until those two boundaries are broken. Check or hold. Let's take a look at how the traders did today. Pardon me. All right, so this is Satya today in Alcoa. Brings home couple R. Here's the OR3. It breaks out. There's his standard wrist box. Pretty good scratch. He shorts. This was an accelerated short. Really, it's a 1-2-3 short. It's close, to the level where that first trade failed. So I like that. That's an aggressive short. It doesn't pay off, so he caps it. He waits for the R10 to get through the PSAR. He might have taken a 1-2-3 here if he was following the same logic here. And he did that here. He'd have had a slightly better trade. But on the upside in a bear market, I don't mind that. So he gets a little bit, and that was enough to pay for that one. So we're good to go. His next one is he waits for the PSAR flip, standard wrist box, gets paid. He might have just gone ahead and re-entered here. If he had, he should have then gotten out here. But then he's good for the rest of the day. And between 1.5 and netting 0.3, he's at 1.8. Good day at work. For about, for 2 hours of work. For 1.8. Nice work. So these are Constantine's numbers for the sniper to close out 2023. We're going to take a look at his. This is the time frame. So he started doing this in August. So this is really a 5-month summary. Starting from August to close out in December. And these are his nets for the daily R. He didn't get his first red day until 2 full months in. So he's got 1, 2, 3, 4, 5, 6. 6 red days. 3, 4, 5, 6, 7, 8, 9, 10, 18, 19, 37, 40, 43, 46, 57, 61 green days, 6 red days. So that's a 9-to-1 win to lose net day. That's pretty good. Pretty good consistency. His equity curve during that period looks like this. Could live with that. I was looking for his worst drawdown in there. Is it that? Or maybe that one. Oh, no, wait, there's one. Let's see. His R distribution is this. So what we're going to check is the 3 things that we look for. No trades worse than -1. Correct. We're looking for positive expectancy between -1 and +2. Yes. And then we're in a normalish distribution on the right half. So the first thing is no losses greater, normalish looking curve, positive expectancy between 0 and 2, or 1 and there's minus 1 and 2, excuse me. And then 3, fat right tails. So he's got all the things we're looking for in our histograms, taking care of the risk. And then finally his performance stats. This is from his the prop trading firm that he works with, cranks those numbers out. So he's trading with $1 million of their money. He's netted 350 R. He's got an expectancy of 240 pounds. His average win to average loss is about 4.5 to 1. That's average winner to average loser. Profit factor of 9.4. System quality number 6.7. And a win rate of 0.67. That is Sniper Trading. Here's my brother from today. And he's trading Cliff. That's one of our metals. This is a 10-minute chart, so you don't have to be all that fancy. There's his PSAR flip entry. Rising Dragon, Rising RL10. There's his automatic 2R Battle Drill second entry. Third entry. He would be ready to get one here. Although I think he did put that in and then exit everything out. And that's his performance for today. And that's pretty good work. $1,000 day. And this was his numbers for today. Let's see, 18 trades. Oops. 18 trades. The best one was 4.8. The worst one was minus 0.09. 8 wins, 9 losses, and average win to loss of 3.5 to 1. So 1 to 1 win rate, and then a 3.5 to 1 payoff. So that's a coin flip that pays you 3.5 when you win and costs you 1 when you lose. How often do you want to play that game? A lot. So good work from the team. Jump down to dashboard 1 now. Bearish normal. The failure to fail today keeps that at a relatively high rate, but you can see the bear market's weakness, and it's getting worse. Tesla, Intel, Disney continue to be the worst. Lots of energy starting to thrive, ExxonMobil and Chevron. Lots of dojis today, small volume, small range, so that's not a surprise. That also means after last week's sell-off that there's still a lot of auto framers testing out well. Only Tesla showed a swing pattern under the 5DD. You can see just how bad Tesla is, but real strength in Caterpillar, and we talked about that one this weekend. It's just crushing things left and right. Merck was the other source of strength in the market that we talked about this weekend, and that had a pretty good day at 1.6. Oh, sorry, at 1.6. In the ETFs, let's see. Clean energy getting smoked. Down another 4% today. That was one of the weaknesses we highlighted over the weekend. Brazil, an active trader at minus 3%. Latin America, 2.2%. Very volatile, very tradable. Frog champions. Follow the price. Lots of auto framers, no surprises there. Lots of squeezes on a low range day. Not a surprise. Lots of Godzillas in our sniper. There's Tesla continues to be excellent. Apple, Intel, Micron, Amazon, and then Rivian and Tesla are Godzillas in our tactical symbol set. All of these other ones are stealthy Godzillas. PayPal is especially lurking exceptionally abnormal quietude on 5-day and 1-day. So that's very interesting. That will surprise people when it comes raging out the gate. NVIDIA at a double green move today. That's worth looking at. So we'll go take a look at NVIDIA now. Sure missed that one. Doggone it. Was so busy fiddling around with Tesla today. So if I had done better with my alerts, the risk box in NVIDIA is $1. So here's $1. There's your OR3 breakdown. That would have given you 1, 2, 3, a 4R move right out the gate with a reasonable give back. Probably would have taken that and microed it out, and then you crush all of that. Holy smokes. Span of control. Intel even better on that opening smash. Let's check Texas Instruments while we're here. Yep, same pattern. So those will be active in play tomorrow. I want to look at PayPal while we're here, just with your permission. And I want to look back. We're going to take a look at PayPal here. Yeah. So what we noticed in PayPal was the extreme compression in the 5-day range and the 1-day range. Notice how small that 5-day volatility is, and it's holding out right at the same support level that it was just prior to that move. And then an extreme 1-day. Boy, that's a stealth move just that's ready to happen, like right now. Like I am ready to trade that one upon the immediate breakout, so I'm going to put my little alerts in right now so that I don't get trapped again with regrets. So that's about call it a $2 risk box. We'll come back and see PayPal tomorrow. Yeah, and Nvidia, we got to be ready for a follow-through breakdown on that one, like a recovery in either direction. So I'll be alerted on that move for tomorrow. All right, that's everything we got for today. We'll get this published and posted, and appreciate your patience. Take good care.